Hello and welcome to today's silver chart analysis video. And it is Saturday, the 10th day of December 2016. Let's look at the daily and the weekly time frames. And on the Thursday video, I was talking about this inside day in which was staying above the 18 average of highs. And I was thinking to myself, man, that just looks like a bullish pattern. So I could easily find out in history how it is done in the past, as we have a situation here where it went down and then it had a green candle after that, which is exactly what the trend seemed to be. That very commonly, the first day after an event of this nature, you'd get a down day, which would then be followed usually with nice up days. In fact, the up days definitely were stronger than the original down days. So that led me to thinking that the most likely probable situation on that trend anyway was a move back to the 18 average of bands, pretty much looking exactly as I thought it would. So I figured no need for me to put out a video on Friday because it's doing as I stated, and I already stated in that video that it's probably going to have an up session. So that's exactly what I still think. The most likely scenario would be that when 6 o'clock New York time rolls around, it's going to gap higher or have early movements towards the upside, breaking into the 17s range. That's the most probable scenario. How this thing plays out as the day goes further will be interesting to say the least. The 1730 level is established resistance. As it's breaking 1740, I would be looking at a move closer to 18 being very probable. That gives you a good 2-3% margin still in play for that kind of move. Still want to be worried about that failed breakout for the move lower, because if it's going to have at least a test of this low, but realistically break below, the most likely situation is that it has a failed breakout to the upside as it's going to have its down move. Now we can see two red candles down. If another red candle comes into play like this, then you would see, oh, break of resistance going down. Okay, message of the market would state probably going to the next several days or even on this date, go below 16. And similar situations, maybe it makes another higher high. Sunday night, Monday morning, maybe it goes up to 1740 or something like that. Even 1731, 1732, it could be microscopically higher. And then a quick move back lower, maybe within the Monday afternoon or at lunchtime, it's falling into the band in the 1670s range or something like that. At that point, I'd be saying, okay, hold on, fellows, this thing is probably going to be rolling over the next several days, so on and so forth. Those are what I'd be looking on a bearish level. Bullishly, of course, if this thing goes up here, just really keeps going higher, all of its support levels are standard on the hourly time frame, and of course staying above this 18 average of highs, then yeah, this thing would go bullish. I'd be expecting a move at least to here, and then see how Fibonacci plays out when it reaches the 18 handle. So that would sum up what I see on the daily time frame. As far as the weekly chart is concerned, it was an up week for 2 weeks in a row. It's also been 3 full weeks of it holding this Fibonacci level point. And the move of 1730 was exactly where this 18 average of low is. It looks like it's a pierce below it. It's not. It's a hit of this level. What would be nice is if this band was like a micro inch to the left, but unfortunately it's not. However, what this is important and why I'm using this as an indicator is you've had a move to this point. I'm looking for a push. If it just barely goes up, then that's just going sideways. But since it's went from this point to 1730, it's had a little bit of a push now. So therefore, on any moves lower, breaking down below here, that'd be another leg lower. But what it also means is if price action is barely below this low, you would rather be short here than you were the first time it was at that area, because it was down for so long and due for a bounce. So it was due for a bounce here. It had its bounce. At this stage, it would not be due for a bounce until it at least came down towards here. And that's really the technical aspect about that situation. For this to get neutral, if it remains going sideways, it's going to take a few weeks for this band to meet up within that price level. As far as where the lows and highs are, we can see it's between 17.5 and 18.5. So that range is the neutral range, and it needs to get at least above 18.5 to attempt to put this into a bull market. And the keyword, of course, is that of attempt. So thank you for tuning into today's video, and have yourself a great weekend. Bye-bye.